This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. Scott Norse here with your Forex Report. Today is Wednesday, April 30th, 2008. What started as a very promising day for the U.S. dollar is now ending on a sour note after the Fed again left the currency blowing in the wind. We began the day with an upside surprise in both ADP employment and Q1 GDP figures at 850 and 830 respectively. The buck was already trading higher before these reports, however, and found only little strength on the back of them. In truth, the headline rise in GDP was misleading, as export growth was the primary driver, due only to a weaker dollar. Economists were quick to point out how many negative components it really included. Moving on, Chicago PMI beat estimates and oil inventories unexpectedly increased. In terms of economic data, this was shaping up to be the best day in a long time for the greenback. However, we saw the buck begin to drop sharply against high-yielding currencies in particular as we moved closer toward this afternoon's FOMC rate decision. Traders were only looking for a 25 basis point cut, but more importantly, expecting the Fed to signal it would be the last cut for some time. The FOMC did match the 25 basis points expected, bringing the overnight rate down to 2%. However, there is still much debate about whether the accompanying statement indicated a pause. As far as expectations go, we feel like the statement was not as hawkish as most wanted. We did warn that this is the same Fed that made emergency rate cuts just a couple of months ago. The statement highlighted the need to watch inflation closely, but said it expects moderation in the next few months. It added that the committee would continue to act as needed to stimulate the economy. This doesn't sound like a closed door to us. The dollar's reaction was mixed at first, but we soon got the sell-off we expected from the buck. Things have settled down a bit now, about an hour after the news broke. However, we would not be surprised to see the greenback continue to fall, at least modestly, in tonight's Asian and/or European sessions. Till tomorrow, have a wonderful night trading. Take care.